Construction group Cashbuild's half-year headline earnings per share jumped 134% to 657 cents. We're now joined by the company's CEO, Werner. Jager. Very good afternoon to you, Werner. Thank you so much for joining us. Well, let's just talk about these numbers, impressive numbers considering the climate that you're operating in. Just talk to us a little bit about what are the things that you did, to be able to give us, 134% rise in your half-year headline earnings per share. It's up 600 to 657 cents.
Yes, I think we need to see that in perspective of the prior year figures that's been influenced by the BE transaction. But still, when you strip out that BE cost, the headline earnings are still up 24%, which is still very pleasing and an impressive performance for us for the last 6 months. It's been a tough trading conditions, but we've managed to expand our margin slightly, our gross margin, and we managed to control our cost. And if your volumes are still there, that all filters down to your bottom line, and that's what really drove the results for the 6 months.
In terms of those margins, a lot of the companies in your space, it seems to be one of the biggest problems, those margins, and particularly, when it just comes to cost, and wanting to be the one that's offering, the base price when it comes to your product. How are you able, to be able to have a quality product and at the same time be able to have the kind of prices that your customers have become accustomed to?
It's a daily focus on those type of things. We've got certain benchmarks in our company that we measure everything again, and the fact that we do things in micro. We don't try and look at the company as a whole. We look at each and every single store. We've got excellent divisional managers and operational managers out in the field that looks at the stores in individual terms and focuses on them. You can't try and look at a region. You need to go down to the detail, get your hands dirty and look at those stores and make sure that each and every single store performs to those benchmarks that you've set, and taking corrective action, swift corrective action on those stores that's not performing accordingly.
And still in this difficult condition, you were still able to have 6 new stores that seem to do quite well in this period. Just talk to us a little bit about your expansion program and where you see growth coming from for your company.
Yeah, that's 100% correct. We've seen that 6 stores were opened in the last sort of 18 months, if you want to talk about it, because that's stores that opened since June 2010, just for comparative purposes. In the last 6 months, we only managed to open 1 new store, and we also closed 1 store. But going forward, we expect another 3 stores to be opened in the next 6 months, and then the first 6 months of the next financial year, they should be in the region of about 8 stores. So we'll be expanding in the rate of about 10 to 15 stores per annum over the next number of years. It's not a set in stone target. You are reliant on developments and developers keeping to their promises and their timelines. But that's certainly our goal, is to do that and to continue growing specifically in South Africa.
When it comes to developers though, last year, your numbers not as impressive as these ones, but one of the things that you were praised for last year, looking at your results last year, was that looking at the customer that you have, that you don't depend only on large projects, you look at individuals, you're looking at, the self-employed person who is in the renovation space, who is in the contracting business. Just talk to us a little bit about how that has filtered through in terms of how you plan to grow your customer base going forward. Are you going to continue looking at that particular customer?
Definitely so. They're the main focus of our business, and especially those bucky builders, the self-employed people you're talking about. They play a very important role in our market, and they service a wide spectrum of consumers. Even higher income group people make use of the bucky builders, and the lower income group. So we'll definitely heavily focus still on our existing and customers that's been loyal to us over the number of years. We also will be looking at expanding our horizon slightly to look at the contractor business a bit in more detail. We've in the past not been very exposed to that, and we now definitely will have a look at expanding into that space.
Let's just talk about some of the countries that you operate in here on the African continent: Namibia, Lesotho, Botswana, Swaziland and Malawi. Do you plan to move to other African countries or expand in the countries that you're operating in right now?
We've got no plans to expand other than the countries where we're currently trading in. There's not a lot of space in some of the countries like Swaziland, and that is fairly full in terms of the number of stores. But there's opportunities for 1 or 2 more stores, probably 1 in Namibia, maybe 2 in Namibia, 1 in Botswana, 2 maybe, but Lesotho, for that matter, is also there. So there's not much space in the countries where we're currently trading in. Our big growth will come from South Africa and the market that we still believe there's a lot of space for stores.
Well, let's just talk a little bit about competition, because I mean you've got Walmart that's coming in, and Massmart, their building section has been one of your competitors. And Walmart coming in, one of the things that we've been talking a lot about when it comes to business is just their prices, you know, and how difficult it is for some of the businesses that operate when they come in, how difficult it is for them to keep their business. What is your strategy looking at a player like Walmart coming into the South African market?
We're going to keep on focusing on our own model and making sure that we keep our promises to our customers that's been loyal to us, and we're going to keep on focusing on that. We got a philosophy never to sell below cost, and we won't go into selling below cost and chasing weekend deals and trying to interact or to react to what customers or other competitors are doing. No, we'll focus on what we do well and make sure that we keep our offer consistent, because it's also very disheartening when you've bought something today and tomorrow you see that the price has been knocked by 20%, and you know, we try and keep everyday lowest pricing. So we're not advocating that we'll be the lowest on every single thing every day. But when you look at a basket over a month, we'll be the cheapest.
Let's just talk a little bit about some of your investors, because this 50 million share buyback was from your staff, and do you see yourself going forward having an offering like that again?
Not in the short term, and that's been a transaction that we've done because of the build-up in the share trust, and we felt it very pertinent that the staff needed to get some of the capital benefit out of that trust. And for the short term, no, there's no plans on repeating that. Longer term, I can't answer that question now.